want me to tell you, dude? I don't fucking know. What do you want?
Oh, you fixed it. We're live. All right, you guys didn't see what Steve's setup looked like right before he fixed it. His lips were at the dividend streams part of the StreamYard. Literally, you look like a child. You were like, we could only see your eyes, and now you're there. Okay.
I'm not allowed to slouch down in my seat.
No, you can't. It's just the audience viewing pleasure. They need to see a nice, handsome man discuss the stock market for the next hour. So.
Damn, Steve, are you going for Movember? Are you not shaving?
I haven't shaved in like 4 days. Soon.
Oh, gotcha.
You haven't shaved? Wow. Okay.
I promise the next time I come on, I'm going to have the same hat as KRIS.
Okay, Carolina, I'll send you one.
I am a knockoff KRIS Patel today.
Okay. I'm actually knockoff Steve today, believe it or not. I've actually been I'll talk about it later on. You'll see.
Oh boy. I can only.
All right. Thank you everybody for joining. Vitaly and Carlos are not making it tonight. Vitaly's got work stuff. Carlos has got daddy duties. So we asked Steve to come on, join the show. It's been a while since you've been on. Last time you were on, it was the big Tesla episode when Tesla collapsed and you got to lay out a little bit more of the bear case. So you're back on the pod, and we're going to talk stocks for the next hour. First of all, Steve, how are you doing? How's life before we get into it?
Life is great.
You want to expand on that? Anything specific happening in life that makes it great, or it's just you're happy?
Yeah, we live in the United States. I mean,
there we go. That's a good answer. That's a great answer. It's not bad. We got freedom, right? Democracy.
Things could be a lot worse. Let's just leave it at that.
Okay, that's fair.
Oh, KRIS, I did not text you. Thank you for serving. Happy late Veterans Day.
No problem, man. I never know what to say when people say thank you. I'm just like, okay, you're welcome. I don't know.
I completely forgot that you were in the military.
It's all good. Yeah. I'm not your like stereotypical like military like looking guy. You know what I mean? It's just you, especially if you're Indian. Indian people, I think I sort of.
Dude, I feel like you're one of maybe like 10,000 Indians that have served for the United States, low-key.
Yeah, like, it's very rare. It's very rare for Indians as first generation immigrants, especially Patels, like Gujaratis. I don't know if you guys know, Gujaratis make up less than 1% of even the Indian military. Like Gujaratis are just not known to be like, I don't know, like they just don't. I mean, there's a lot of reasons why. It was actually kind of a little bit of a political talking point at one point where like an Indian politician says Gujarat, like the state that I come from, they don't really play a good part in serving the country because barely anyone from my state actually joins the military. You know, usually it's the Punjabis. So it's like your crew. You know, you guys are fucking born and bred to be the cannon fodder. So, you know, that's what happens. Yeah.
You know what's so ironic about that? We're fighters, and in high school or middle school, I never got into a fight ever.
Yeah.
Like I never got into it.
I didn't have a choice, man. I did not have a choice. Yeah, but no, Gujaratis we're just very pragmatic. Now, that's the funny thing though. So most a lot of prime ministers have been Gujarati, including the one we have right now. The current home minister
is a Gujarati?
Yeah, he's Gujarati.
I didn't know that.
Yeah. Oh, wow. Amit Shah is Gujarati. Then you had Morarji Desai was a PM in India. He was a Gujarati. Mahatma Gandhi was a Gujarati.
Really? I didn't know that.
The founder of Pakistan was Gujarati. People don't know that. Ali Jinnah, he was actually Gujarati. So a lot of Gujaratis are in positions of power. And even business, like Gujarat has a lot of businessmen. So if you go to India, you'll see like a lot of the industrialists, they're all Gujarati people, you know. Wow. So
let's move on so Steve doesn't have to hear two brown guys talk about how good Indians are. Let's get into this one. First topic of the day, Warren Buffett. He bought a stock and he requested permission from the SEC. I have no idea how this is even fucking legal, but I guess you can do it if you're Buffett, to keep the stock's name private, even though it's a public company that has to be disclosed, within fears of the stock price going up. He did this with Verizon in the past. He did this with Chevron in the past, and I guess the SEC is letting him do it again with another company. So let's start off with you, Steve. You've been in the equity markets for longer than me. Is this common? Does Buffett do this? And what stock do you think he's buying Tesla? Because I know you love Tesla. You think he's getting into Tesla? You're muted, by the way, Steve. Come on, Steve. Come on.
I don't know why that went on mute. I don't really care either way. To be.
What do you mean you don't care? This is Buffett. How can you not care about Buffett?
No, I didn't say I don't care about Buffett. I don't care about him wanting to keep this purchase private. I just don't care.
So you don't think there's some mysterious stock that he knows that's going to go up and doesn't want the world to know?
Maybe he's taking a risk and doesn't want people to follow him. I don't know, nor do I care. It doesn't make a difference to me.
Okay. Chris, your thoughts on this secret company?
Well, I've been trying to piece together what it could be. So I'm playing like this elimination game, right? So number one, it's definitely not something small. Otherwise, he would have just took it over and just bought it out, right? If it's something like in the small or mid cap, he's got enough capital just to buy it out if he really believes in the value and just add it to the Buffett family of companies that he's bought. So it's definitely not small and mid. So it has to be large and mega. So that's number one. Number two, it can't be anything that he already has or he's already sold recently. So that rules out a good number because he actually right now just liquidated a good number of positions. So that's another thing. So eliminate all of those. Then you have to look for where are these in relation to cash flows? Because if you look at Buffett's investing style, they typically have companies that throw off massive amounts of cash flow, but they may or may not be utilizing some of that cash flow to be as shareholder friendly as possible. So if you look at the likes of like Apple and stuff, right? Apple is not growing as much revenues, but if you look at the amount of free cash flow it throws off, and then the free cash flow goes back into buying back shares, that goes right into Buffett's value proposition. So that's another like thing that you have to look for.
Right.
And so like I said, I've just been playing this process of elimination game to figure it out. The other thing is the float, and this is the part that probably gets me. The float is probably high, but the volume is not that high, which means that if, let's say, the stock was just a real mover, like just a lot of shares are always trading in and out, that means that he could actually build up a position rather quickly because there's liquidity there. So that means that it's not as liquid. So it might not be something like a Google, a Microsoft, or an Amazon or something like that, which trades like, 5 million or 10 million shares a day, so it's hard to piece together exactly what it is. I don't think it's a company in the oil and natural gas space, primarily because he's already got so much exposure to it.
And he just sold out of Chevron too.
Yeah. So
what do you think? It's just interesting. Some people are saying Google in the chat, but you're saying that's not it.
If I had to guess, believe it or not, it might actually be Disney, because he's actually made comments in the past.
He did, yeah.
Alluding to that there's one company that he always regrets not buying, and that company is Disney. So I don't know. It'll be interesting to see what it actually ends up being. But Disney is one candidate. Another one is Verizon. I know that true. I have both, so I'm a little bit biased towards them, but they fit right into Buffett's wheelhouse. They throw off tons of cash flow. They are they're likely to just keep their dividend strong, especially on the Verizon side of things, and that additional cash flow can be channeled into share buyback. So he was also an owner of Verizon not too long ago. He sold off when the interest rates started going up. So I'm not sure if he's going to be re-entering the position, because he was bullish on it at some point. And it's just, to me right now, Verizon's an easy math play. Like if you know math, so I don't know.
Why do you think he didn't disclose it? What do you think is the reason that he asked?
He says it because the thing is, this is the problem that you have when you're running billions of money, right? The minute you make a move, everyone will start chasing you and they'll bid up the price of the company. So you won't be able to get the best execution price possible. So as of right now, like look at what happened today with Disney and ValueAct. ValueAct is a much smaller player. ValueAct bought more shares of Disney, which meant that everyone else was like, oh, I'm going to follow this big guy who's been known to be an activist investor and create shareholder friendly policies that have returned a ton of value back to shareholders. I'm going to piggyback on them. So they are now bidding up the price. So right now you look at Disney stock is at almost 94 something today. You know, now, unlike ValueAct, which is not as like out there in the world, Buffett buys anything, it's guaranteed to go up 10%.
Sirius was
20%.
up almost 10% today as well. Yeah.
Yeah. So it just goes to show that, you know, Buffett has the power to move markets. But there's one thing that is more concerning than the secret one that he's buying. And maybe Steve, you can comment on this. He's selling out of positions that have traditionally been his, you know, like go-to in his wheelhouse. And he's raising cash on top of already a giant cash pile. See, the strategy that people tend to apply when it comes to investing is, oh, you need to just buy quality stocks and hold them forever. Even if they don't go anywhere for 10 years, it's okay. Like, no, motherfucker, that's not how it works. Like, imagine every person that bought GM for the last 10 years and they got almost no fucking return. Like, think about that for 2 seconds. Almost no return. Is that something that you want to be a part of? 10 years of no returns? Or do you want to be part of, hey, I'm going to hold on to this $1 billion on the side, and when the opportunity comes, I'm going to buy the shit out of this stuff and make a buttload of money that I don't have to worry about for the next 10 years. Look at what he did to Goldman Sachs, Bank of America. I think, was he in Citi at one point, Steve? After the collapse?
Citi's a new purchase. I mean, he purchased them last year.
Yeah.
I don't know if he exited.
Yeah.
Let's frame the question like this. And Steve, I'm gonna give it to you here. Let's say, he is objectively raising cash. He has like 160 billion or something in cash. Can you give us a little bit of the macro perspectives, because we know you're an expert and everything you say is golden when it comes to macroeconomics, around why 2024 is going to shit the bed and Buffett's going to look like a genius for raising cash? Can you give us a little bit of kind of the bear case you're thinking that 2024 could have for us?
I wouldn't say that I'm an expert.
No, I would call you an expert. I would call you like phenomenally
But there are
strong.
more people that are increasingly getting worried that a recession is imminent. Now, a recession is definitely going to occur at some point in the future. Whether it's 2024 is a different story, but unemployment rates are getting very close to 4%. They're at 3.9. I actually did not realize the amount of business bankruptcies until I looked on trending economics before.
What's the stat for us? What's the stat?
It's up significantly.
These are small businesses that filed for Chapter 11 in the United States?
Bankruptcies in the United States increased to 17,051 companies in the third quarter from 15,724 companies in Q2. It's up a good 40-50% in the past 9 to 12 months.
Basically a year. Wow. That's a hell of a stat. I haven't heard of that stat before.
So think about it like this. If the Fed does not, and look, CME FedWatch tool is great for the percentages. It looks like we could get a pivot in March. More likely is May, June. But look, if the Fed stays hawkish and they keep rates higher for longer and they keep the cost of capital restrictive, they could throw us into a recession. We know that Buffett likes to keep a minimum of 60 billion cash on hand. So he may be looking at it as get out of some positions, raise cash. And then if something happens in Q1, Q2, 2024, where there's increased sentiment about a recession coming in, maybe he's got something on the horizon he wants to acquire and he would still have cash left over afterwards. I mean, I go back to pipelines. He loves energy. The guy who's taking over for him is the head of Berkshire Energy, and he did purchase 7,700 miles of natural gas pipelines from Dominion in 2020 or 2021. I could see him buying a Kinder Morgan or something like that, especially with its huge stake in Oxy.
Yeah.
This is interesting. Chris, do you want to follow on that a little bit if we're going to play the bear side? Because we've had amazing CPI data. Headline CPI went from 3.7 to 3.2. For those that didn't see PPI data today, came in negative. We thought it would be positive. So PPI data was good as well. That's what helped the market continue a little bit of the rally. Chris, what do you think is a little bit more of the bear case for 2024 that maybe we're not seeing or that maybe warrants a hedge on some of the gains that people are seeing right now?
So far on a superficial level, there isn't much to worry about, but that's only on the superficial side. the part that's concerning to me is unemployment. So I'm looking at unemployment data right now from a lot of different sources, and I'm looking at, just non-traditional metrics that people tend to ignore, but can be leading indicators of what's going on. Because I think right now in the small and mid cap space, there's a lot of issues around refinancing some of the debt that they've taken on. These bankruptcies are not because, they just said, oh, you know what, today's the day, we're going bankrupt. Usually they have credit events that prevent them from going any further. They can't make payroll. They're seeing diminishing returns on some of the products that they have. So as companies scale back, that tends to lead to unemployment, and then unemployment leads to economic events that are slowing. So right now, when I saw the number for the PPI and CPI, on one side, I'm happy. I'm like, yeah, this is great. CPI is coming down. The Fed's job is done. Yay, everyone celebrate. On the other side, I'm asking myself, what is helping the CPI outside of just the restrictive rates, right? And it could be a deteriorating economy, and it may not necessarily be as pronounced in like the broader markets, but in, just like Steve said, at the ground level, it actually could be affecting people. The other thing is, with the introduction of ChatGPT and Bard and all these LLMs, I find it hard to believe that there's going to be a necessity of a huge category of people that are traditionally in the space of like writing stuff, right? So as an example, someone who does, copywriting, someone who does
freelancer stuff,
a lot
SEO
of them
stuff.
are not going to survive this, because dude, the cost of doing that has gone down significantly, unless you're like some kind of really like big followed person. So the cost of
think AI could get rid of a shit ton of jobs in 2024, furthering some type of unemployment rate?
Absolutely. Maybe you don't need 10 coders. Maybe you only need 2, because the AIs are so good that the 2 guys that you have, the workload can.
But wouldn't that be good for the stock market at the end of the day? Because that just means revenues are going to go up, productivity is going to go up. Like, it'll be a recession.
Not at the cost of jobs.
Yeah.
Well,
that means that you'll have. That means you'll have you'll end up with a bifurcated like economy, where you have the employed that are getting high wages because they're knowledge workers with, ChatGPT like experience that can do 10x what they used to do. And then you have like the bottom 80% losing their jobs. So the 20% are going to be super high in net worth, and the bottom 80 are going to be, pretty much out of a position. So it's almost like you have to be a 10x coder, and then with the introduction of LLMs and stuff, you become even more productive. But that means that all the other coders and all the other people that can't think out of the box, who are just there to do busy work, they're not going to have a job.
And you got to remember something that KRIS touched on that I'm going to expand on. You do have a lot of debt coming due next year and in 2025. If the Fed does not cut sooner than later, we could find ourselves in a position where the banks take on unwanted assets more than they are now, because more companies are not able to refinance the loans at a working structure that works for their business. If that occurs, you'll have more bankruptcies, you have more unemployment, and then you'll have banks holding notes for unwanted assets, selling them for pennies on the dollar, taking larger write-downs and losing more capital. We're not out of the woods yet, in my opinion, and we really need some movement on the Fed, because when you look at everything, their dual mandate can't stay a perfect dual mandate indefinitely. They are going to have to pick a side, and at some point, the side of maximum employment and higher inflation has got to win out. Otherwise, they're going to throw us into such a recession with it's fragile right now. Rates higher for longer is not good.
Let me put a scenario out to you guys, and I want to see what you guys think. Me and Adam were talking about this today. The reason why in 2023 most fund managers missed the rally, right? Tom Lee got it, some other managers got it, Bill Ackman got it, but a lot of fund managers like Mike Wilson, right? They missed it, was because they thought 2023 would be a cataclysmic year if we end up in a recession, because in a recession, you have to stimulate the economy, which means you have to lower rates. Well, there's no way we could have lowered rates in 2023. Inflation's too high. So if we end up in a recession and there's no way to stimulate the economy because inflation is still that bad and CPI is not declining fast enough, you got just a hodgepodge of 2023, where the one thing the Fed has historically always done to get the economy moving again, which is get rates to zero, is what they did during COVID, they wouldn't be able to do because inflation would still be too high. So that was 2023. We ended up being okay. 2024, do you think that kind of fear is gone? Because even if shit hits the fan, the Fed can always lower rates to the point, because they're so high right now, right at 5.25%, that it can re-stimulate the economy so quickly, or at least quicker than usual, that maybe that recession isn't a 2008 type of scenario. What do you think about the interest rates being a secret power in 2024?
When they cut rates last time, what were the rates at?
When they cut rates last, I think they were at like 2.5, 2.25.
Okay, and they were able to stimulate the economy from 2.5.
Well, they cut it to zero, but during 2020.
Where are rates right now?
5.25.
You could put rates at 3.5 or 4 and still have more than enough room to stimulate the economy if you need to. There is a fine line. Rates are so high right now that, look, mortgages are sky high, carrying costs on credit cards are sky high, business loans are sky high. You can drop rates a point and a half, still have room in the tank to take rates down to 2% if you need to, if we go into a recession. But keeping rates.
No, but that's my point, Steve. Don't you think a recession is kind of avoided if the Fed can just easily lower rates and re-stimulate if we do get into it? Like, that's my point.
No.
Why?
It's not easily avoided.
Well, no, I'm saying in 2023, the Fed couldn't lower rates even if we were in a recession because inflation was still so bad. But if inflation has come down, if we still get into a recession, which is what the bears say, they're like, look, inflation's coming down, but still there's something that's fucked up in the economy. It'll go down. The Fed can lower rates and they can offset all the impacts.
Ask Japan. Ask Japan. Go ahead. Ask Japan. Japan.
I don't speak Japanese, so how would I ask Japan?
Japan is a classic example where if you don't have good economic productivity, regardless of how many times you cut interest rates and even go into negative, you cannot go. Yeah, exactly. Structurally, you need to have innovation. You need to have changes in the economy and business growth in order to grow, man. So no, you can't. Just lowering interest rates will help encourage more speculative behavior, but that doesn't mean that there's going to be tangible benefits that come out of that. I will say this though, it's just this is where guys like me and Steve, and we'll probably talk about this eventually, Steve, because I think there's opportunities in the current market where you can buy up companies that have strong cash flows that can weather the storm better than anyone else, because at the end of the day, their fundamentals are just too strong, right? So if you're in those companies, whether a recession comes or not, you're fine. You're gonna make money on the dividend side, and you'll make money on the capital appreciation side because the cost of capital for them will go down tremendously, right? That's the goal. So 2024 is going to be about protecting the portfolio, making sure that you have liquidity available to buy up opportunities, but also at the same time to have the ability to generate income the entire time. So I'm not going to talk about a lot of these companies right now, but maybe one day we can, me and you, Steve, we can do an entire episode about it. But I think that's where you should be doing a lot of portfolio positioning, and not only in equity assets, but there's assets in preferred equity that are actually very attractive right now. And on the bond side, I don't know if you guys buy. Steve, do you buy bonds at all?
You and I had this conversation about corporate debt like 2 weeks ago.
Did we?
Yes.
I didn't know that you bought any. I forgot. So, yeah.
So, Chris, you're basically saying in 2024, there are some stocks that would be benefited if interest rates come down, even if there's a recession, but the overall economy is not necessarily going to be benefited just because we lower rates.
Yeah. Especially, like I said, this is what happens. I mean, the scenario that we might be going under can have mild recessionary effects that really challenge a lot of earnings growth. And with the valuations on, let's say, the larger, especially large cap right now and mega cap, valuations are not low by any standards. They're actually relatively high compared to historical standards. So if you take away their growth, that means that you need a valuation reset lower, or at least some level of correction. Now, this doesn't apply to every single one of them. I'm sure Google, I'm sure Microsoft, I'm sure Amazon, they just have such strong businesses, and they're on the vanguard of AI. So I don't necessarily think this is gonna affect them much. But there are a lot of large cap companies that seem very frothy right now. And so, the goal hopefully for all of us for 2024 is avoid the landmines. Do not get yourself caught up in buying a landmine that just explodes on you. And now you got 5 years worth of bullshit that you have to deal with and become a long-term investor in just to get your money back.
Okay, let's do that. Let's do a segment on that real quick. How would you define in this current economy on November 15, 2023, a landmine in the stock market right now? What is a landmine? You don't have to say a specific company, but what are the characteristics of a stock? Like, for example, Microsoft to me is kind of a landmine, even though, it could go higher, but it's at all-time highs, $3 trillion. I mean, do we really, Steve, what are your thoughts on that? Okay, Steve disagrees with Microsoft being a landmine. Steve, why is that a landmine? You're going to buy a $3 trillion company? You're going to buy it?
I don't want to.
You seem so disappointed because I don't want to buy a $3 trillion company. Like, really? I deserve that. I deserve that big of a sigh from you. That's like my girlfriend sighs like that. Like, really, you're gonna sigh like that?
But when you're saying landmine, a company like Microsoft, while it may be overvalued to some, you can't say that a company with that type of war chest, that type of revenue growth, that type of cash on hand is a landmine. That's not necessarily the definition of a landmine.
Okay, so what is the all right? So what is the definition of landmine? Okay, go ahead.
Financials.
Okay, so then what do you think is a landmine in the stock market? If you had to characterize
landmines are typically things that they look very promising right out. Like, if you look at them superficially, they look very promising. They are companies that people are just like, oh my God, the past performance was so good. That means that the future performance is going to be great. Also, they're in an industry that may be on the secular decline, but it hasn't shown up in their numbers just yet. Right. So as an example, I consider Enphase, or at least I thought Enphase, especially when it was like in the 200s, a landmine, because everyone was looking at past numbers and saying, oh, the value of this company is great. Look at the PE. The PE is amazing. Like, it's starting to come down significantly. That means that at this price, it's going to be a great investment. And the truth is, the entire industry was on a secular decline. Right. So anyone that bought in thinking that they were getting a great deal because it had gone from 300 to 150 was like, oh my God, I'm getting half off. This is amazing. No, you got caught in that landmine, and now it took a huge drawdown to almost like $70. It's up slightly again today, but
which stock again are you saying? Which stock?
Enphase.
Oh, Enphase. Okay.
Yeah. So on face value, it's like that. PayPal is a very similar story. As much as I like PayPal right now, in terms of valuation, looks very attractive, but their business model could be in a secular decline because of all the competition. So these are the kinds of things that you have to just be very careful of. And trust me, I've stepped on my fair share of landmines. So don't get me wrong, like, I'm not infallible by any means, but all I'm saying is, because I've stepped on these landmines, I think at this point I can safely say I can avoid some of them. So right now the goal for 24 for me is just avoid the landmines.
So you're saying on a surface level, the stock looks attractive, kind of like a girl at the bar. It's like she looks attractive, but you start talking to her, get to know her a little bit, and you're like, holy shit, this is a landmine. I can't really,
Yeah, exactly.
Stream, please.
Okay.
Stage 5 clinger with crabs, bro. That's what it is. A stage 5 clinger with crabs.
So,
okay, what are you about to show us, Steve?
I'm going to make you retract your statement. So,
okay, here we go. Hold on. This is a public challenge for not just me, for the chat. So my assumption, my thesis.
No, just
hold on. Let me just say my thesis is Microsoft is a landmine. We're gonna have the chat see if they're also convinced to retract my statement. Go ahead.
So this is big tech after Q3 earnings. Microsoft is in the center. On a TTM, they have done $218 billion in revenue, $151 billion in gross profit, net income $77 billion, free cash flow $63 billion. They have an operating margin of 43% and a profit margin of 35%. They have $144 billion in cash on hand and $42 billion in long-term debt. They have almost 3.5 times more cash on hand than long-term debt. That is not a landmine. Now, can the valuation be frothy? Absolutely. But this is a company that continues to grow, and the AI, we don't know how big it could possibly be, but Microsoft is going to be one of the
But I'm just
players.
saying, Steve, at $3 trillion, at $370, I know Dan Ives wants to go to 425, but you don't think if you buy at 370, it can't go to 330, can't go back to 300?
It absolutely can, but ask everybody.
That's a landmine. That's a landmine.
Ask everybody who ever sat out of buying Apple along the way because it hit 500 billion, a trillion, 1.5 trillion, 2 trillion.
I'm not saying sit out. I'm just saying maybe right now it's a landmine. That's all I'm saying. That's all I'm saying. By the way, hold on.
I think the definition
remember, Steve, Satya Nadella sold half his stake in Microsoft November of 2021 at 315. So he obviously felt Microsoft was a landmine at that time. Now Microsoft's at 370. I mean, I know things have changed, but still.
What is the definition of a landmine to you?
To me, it's literally you buy something, the shit goes down so much, you have to like recover 30-40% just to break even. That to me is what I'm getting as a landmine. Or you have to wait years until it recovers.
In all seriousness, right? That can be any stock.
I mean, sure, theoretically, but the point is you don't want to buy.
Apple's gone down 30-40%. I mean, look at 2022. I mean, that can be any stock.
For me, it's a company that on the face value looks attractive, but if you go into like the business or you look at some of the intangibles, is actually a terrible value proposition. As an example, Baba, right? Look at Alibaba. Alibaba at one point, everyone was like, "Oh my God, the greatest company ever."
There's another Steve, you're going to convince us? Are you going to convince us that communist stock is not a landmine, Steve? Really?
Hold on. But the problem with something like Alibaba was everyone looked at the numbers, everything looked great. Problem was no one could have really predicted that the Chinese government were going to be assholes, right? That's where guys like Everything Money failed on it, which is they looked at purely the stock price and they looked at the cash flows and said, you know what, this is a strong company. It's got good cash flows, but the erratic nature of how the Chinese are actually, it's questionable. And people did not take that part into too much consideration, and that's what made it a landmine. Tesla, believe it or not, I think could be a landmine.
Whoa, you think Tesla is a landmine right now?
So I'm gonna say something that's gonna shock you guys.
Okay, what do you got?
I was listening to something today on my ride home.
Okay.
I'm not gonna plug anything or say who said it, but it was something I did not think of with Tesla, and it's making me possibly change my long-term view.
Whoa. Okay, so we're getting a Gordon Johnson here get bullish on Tesla. What do you got? What are you going to say?
I never really thought about their humanoid aspect, like really in depth. And
you mean the bot?
Yeah. And with how well they have excelled in manufacturing, if the humanoid bot really is that good, if they're a front runner in that space, it could be really huge. Now, it's going to be horrible for society, but it could be absolutely huge. I'd love to know more about profit margins on it, the reality of it. I mean, I look at what Boston Dynamics has done with a lot of their stuff, and I do think it's a 5 or 10 year play, but that aspect of Tesla is very interesting to me. I need to know more about the math behind it, though.
But would that mean you buy Tesla because of the bot? I mean, it doesn't seem like you really changed your perspective.
I'm a shareholder by proxy.
Steve, everything you just said to me means nothing because you just want it to sound like you're bullish. You don't give a shit about the bot. You don't think the bot's ever going to become real. You don't think you're definitely not going to buy at $700 billion market cap because of a bot that might happen or might not. Like,
looked at Boston Dynamics and what they're doing.
No, I'm bullish on that. I think you're fake bullish. You're sounding bullish. You would never buy the company.
I never thought about really until today.
Okay. All right.
That's all. But Baba, I'm on pins and needles for tomorrow morning. Earnings, baby.
Give us the bull case on Baba. Why do you still own your shares? Why are you a traitor to the American economy and owning Alibaba right now?
Okay, so I got caught on a thesis at the time where the Chinese economy was growing like a monster. You had the projections at the time that by the middle to end of 2027, they would have a larger economy than the US. Baba made sense because of the space that they're in. They had just gotten Alibaba Cloud. If the numbers are correct, The numbers are amazing. Charlie Munger buying it gave me a little bit more confidence in the numbers. He's out of it. But from a numbers standpoint, it is a very attractive valuation. I am down considerably on it. I don't necessarily care. I mean, look, it could go to zero. It's not going to impact me. I don't have a large position in it. But if the numbers are real, they are buying back a ton of shares. The free cash flow is huge. It is one of the cheapest tech stocks I've seen. And there's a lot of downside to it. But with
is that downside just China risk, or what else is the downside
look, there's
risk?
Definitely China risk, but if U.S.-China relations slow down a little bit and we're not at each other's throats, it could be a halfway decent long-term play that could spike. I mean, I'm getting out of it once I get anywhere back to even, but from here it looks interesting. I've considered buying more to dollar cost average down, so I don't have that much higher to go up to get out.
Okay, that's fair. Yeah, Baba's always been very interesting. I agree with you. It is incredibly cheap. I mean, if you look at the financials, it's just that after what they did to Jack Ma, that was tough.
Yeah, I mean, I am going to get out of it at some point. I just don't know if I want to take a loss or ride it out.
Okay, I want to present a scenario to you guys that a viewer of the channel brought up, and I want to know both of your guys' perspectives. So this person bought $10 January 2025 call options on Palantir. He is up 625%, and he DMs me. I want to know what you guys think on if I should exercise some of the calls, if I should sell all of the calls.
Don't ever exercise. Which?
No, because that will be fat, Chris. You got to exercise.
No. Do not. If you have a year worth of goddamn intrinsic, like a time premium, never. Like that's like the first rule. Never exercise. You just sell it and buy the shares if you want. Never ever exercise. So there you go.
No. You got to break this down. Break this down more. Why shouldn't he exercise that? First of all, can you explain what exercising is outside of like lifting weights, and then we'll go further. Go ahead.
You are basically triggering the order to be like, let's say he has $6 call options. That means that he will buy those shares at $6, and basically that'll be his cost basis. The problem is there is a shit ton of premium that he will just poof in the air if he does that. Like I've seen retail traders do this, and it's infuriating because it's almost like you are giving the other guy on the other side who's fucked a discount on getting screwed over. Steve, go ahead, explain to these people what I'm talking about.
You guys are very passionate about this. I don't know. All right, go ahead.
I don't want to, because look, I think the only way to answer that is nobody ever got hurt taking a profit. And I'm going to leave it at that.
Sell the contracts. Do not exercise. Sell the contracts.
If he exercised those $10 calls, right? Palantir's at 20 right now. Let's hypothetically he would be up. He would get $10 shares, right? The stock would be at 20, so he would have that delta of gains. And then if the stock goes to 30, 40, 50, he has those $10 shares. You're saying you're already up 6x. So why would you give away the gains of being up 6x just to exercise the stock at a lower price, even if you're bullish on the company, correct?
Right. Just it makes no sense to exercise. Just sell the shares. That's it. Sell the contracts. If you really love Palantir all that much, take the profits from selling those contracts and just buy the stock in the open market. You will actually also, your cost basis will be 20. Yes, you will pay some taxes on the gains. It happens. Congratulations. Welcome to America. This is what we do. We pay taxes, right? But if he wants to hold them for a year, he'll have long-term capital gains tax, which is taxed at a lower rate. I don't know the guy's situation on taxes side, but I would never execute at that price because now you're going to lose on all that intrinsic value. Time value. Instead, sell it. Let someone else have that time value. You can just chill and buy the stock if you want in the open market. That's all.
I'm going to say something. I'm choosing my words very carefully around this topic because I don't want to be portrayed as giving advice. Nobody ever got hurt taking a profit. That's the first thing to remember. And the second thing is, if you are buying options or selling options, you better know what you're doing. And you better not be looking at KRIS to tell you what to do, because that's suicide. You need to understand every aspect of where you put your money. Otherwise, you have no business putting your money there, period. You shouldn't be looking at anybody to tell you what to do or anything. Like, especially when it comes to options, you do not own the underlying asset at all.
Yeah.
You should be watching every option video from TD Ameritrade or Tasty Trade or reputable places. You need to be reading every piece of information. Understand, if you're doing a credit spread, you need to understand every which way to Sunday of how it works, no matter what you're doing. And it's just,
okay, so let me ask another scenario from this. So this $10 it expires at January 2025. He's up 6x on it. Would you sell now, or would you let it ride to maybe 8x, 9x if Palantir keeps going?
It's not fair for any of us to answer that because we don't know what the person.
I mean, what would you do? Would you sell at if you're up 625% on a position? Would you sell?
It depends. I have been.
I mean, I would sell. I would personally sell. I would.
I mean, it depends on the situation. It depends. There's too many variables.
Steve, just answer one thing. Would you sell or would you exercise? Like, if you were up that much on personally, would you sell it or would you exercise it? Not the financial advice for that person. What would you do?
Oh, I'm never exercising. Ever.
You guys are going to end up being really fat. You guys keep saying these blanket statements. Like, it's not going to work.
Well, and quite honestly, the only thing that I let roll off is when I write a covered call. Other than that, oh, hell no.
So when does it ever make sense to exercise the contract, or never? You guys are saying on options.
If you're about to get, if you are,
KRIS, don't answer that.
Steve, fuck it. I want to answer that. It's not directly relating a single stock, but if you are getting to a point where there's a dividend payment that's coming, and that dividend payment is a nice juicy dividend that is more than the time value that's left on that option, that's when it makes sense to exercise early, so that this way you actually get the shares before the X date, which means you get the dividend payment, which is outweighing whatever time premium that may be there in the first place. That is the only time where it makes any sense to do it. So that's yeah. That's it. And there's other scenarios, but I'll stay with Steve and say no, don't exercise. So
yeah, well, that was Bay, right? He texted me. He's up 625%. He was just curious. He just texted me that you guys are making a lot of sense right now. But yeah, I agree. I mean, if I was up 600%, I would take the money and run. Like I was up not 600%. I was up 100% in July, and I did not take profits. So it's like, if I'm up 600%, I'm gonna take some profits and keep it going from there.
The problem that I always see with options, like novice options traders, are that they are in the money, everything is great, and they don't want to take the option. They want to just keep squeezing more and more and more. And what ends up happening is you have a black swan event, and now everything that you have goes absolutely to shit. So that time premium, there's a reason why you want to be as far out as possible, so that this way you have a lot of chances, a lot of things to help it recover up. Imagine every person that had call options on companies going into 2020, 2020, let's say January. I mean, not January. So let's say 2021, right? You could have been like, oh my God, this is great. I'm doing amazing. And then COVID hits, and now your shit gets blown up. Last minute, nothing that you could control, but you don't have the time for the stock to recover. What are you going to do? Look at what happened earlier in 2021, where everyone thought like, hey, I have options on Meta. I have options on Google. These are, 5-star companies. They're not going anywhere, blah, blah, blah. And they were holding on, hoping that they were going to just, exercise, or they were going to sell those contracts in January. But in November, everything nosedived. And what are you going to do then? So one of the things that you want to be in the option side is just, I don't know. I'm not going to talk too much further into it because I see Steve giving me that look, be like, Chris, just stop. Yeah.
First of all, Steve, no, it's not that. He's not giving specific advice. No one's going to fucking sue Chris for talking theoretically about options. Second of all, you said to watch YouTube videos, right? Guess what platform we're on, Steve? YouTube. So and people are watching the video.
Where did I say watch YouTube videos from?
You literally said watch trade, watch TD America. These are YouTube channels, by the way, that are not that much smarter than us.
Financial institutions. You need to stop.
So because they're a financial institution, they're more qualified to talk about options. I don't know. I think Chris is more qualified than a lot of these people. I'm just saying. Anyway, let's end it off here with Bill Ackman. This is his updated portfolio. What do you think about it? Google, Chipotle, Burger King, Hilton, Howard Hughes, Canada Pacific. He's up 200% in the past 5 years. Any thoughts on his portfolio, or is it the same old, same old?
So his investing strategy, in my opinion, is pretty simple. He looks for companies that are deeply mispriced. He can do some good analysis in terms of cash flow. And then based on that cash flow, he can have some major returns. So as an example, Chipotle has probably been his biggest winner that has done a lot of offsetting for some of his lower performers. Because, I mean, if you look at the companies that he has, not all of them have done exceptionally well. Chipotle has really been the one that set him apart. And that's typically what it looks like with a lot of portfolios, where you get into some companies at some really attractive prices. You see that the business fundamentals are there and the growth is there, and you just hold long term. I like franchises for that specific reason. That's exactly why I'm in Wingstop. Like, a lot of people give me shit about it, like, oh, Wingstop, like, that's dumb. And I'm just like, bro, have you ever been to a Wingstop? You sit there. One time I sat at Wingstop for about 3 hours. All I did was just calculate the number of fucking Uber drivers that came in and out, in and out.
You did not do that, Chris. You're lying.
I did. I had time. So that's what I did. I was doing other things also at the same time. So
did you order some wings at least? Were you eating?
Yeah, of course. Yeah. Okay. Yeah. I sat there, I got wings, and I had some work to do. And I was like, you know what? They've got air conditioning. It was nice. I didn't want to go back to my apartment at the time. My air conditioner wasn't working. So I was just sitting there and I was just like, okay, let me watch. And all I saw was DoorDash, Uber drivers just constantly in and out, in and out, in and out. So, this goes to show that they have a business model that works. They have an they have a very strong e-commerce presence. So,
Chris, you know what's interesting? My unofficial economic indicator is up 12% since October 25th.
What does that mean? What do you mean economic indicator?
It's an inside thing between Chris and I.
Okay. All right. Well,
it's up 12%.
What do you think about Ackman, Steve? Any thoughts on his portfolio?
You can't go against him. The guy is...
I mean, look at what he's beating on Buffett on the returns. 192% is a hell of a return. 5 years.
Yeah, it's great.
He has a more concentrated portfolio. That's why. When you have a concentrated portfolio, you can outperform these guys. I mean, bro, I beat these guys. My year-to-date return is 270%.
Whoa! Hold on. Your year-to-date is 270? You're muted, Chris. I don't know how you're muted.
Yeah.
That's pretty.
So I beat Bill Ackman. There you go. So,
I mean, don't forget, Chipotle on its own is up 358% over 5 years.
That's true.
So like Chris said, that has definitely offset some other ones. But 198% is 198% either way you look at it.
I was up 101% July 31st. Not anymore. Year to date. Not anymore, though. Not anymore. Cool. Okay. So, do you think, last question here is for you, Steve, because I never got your thoughts on this. Do you think Google is the best big tech for Ackman to be in? I mean, did you think like he could have picked a better one, like Apple or Microsoft or Amazon? Or
yeah. So when I think of big tech, those are the 5 I think of. And I actually wrote an article on Alphabet 2 weeks ago saying that I think it's the best play right in front of Meta. They're neck and neck. You look at the margins and you look at everything else. Alphabet, it was, to me, the better one because of how much more free cash flow they generate, how much more cash on hand they have, the rate at which they're buying back shares. But the two of them are absolute printing presses. I'm a shareholder of both, own Meta since they've been public. No interest in getting rid of either of them. I like all 5 of them right now, and I think.
So you think Google's the cheapest in big tech right now?
I would have to rerun the numbers, but from 2 weeks ago when I did all the numbers, yes, I think it is the cheapest in big tech. I'll bring it up. Just give me 1 sec. I'll show you exactly what I mean.
I do have to just clarify one thing. This is an unusually strong year for me. So by no means is like, oh yeah, can you do 270 every single year for the next 5 years? Dude, I would be at that point, I should just quit my day job and just do this full time. Like, no, this was a year where there was a lot of market irrationality. And I've been talking about this market irrationality since we've been doing this, and it's very well documented, right? Look at Meta. Look at how much Meta recovered. If you guys remember how I was screaming at the top of my lungs about Meta. Remember that, Amit, when we started the channel?
Yeah.
Be like, Meta at $88 makes fucking no sense whatsoever. Their cash flows are super strong, and they're making all the structural changes. I posted literally like 4 pages of DD in the Freelancer Finance Discord when I was still on it. Remember? And that was the one stock that me and VITALY were like 100% aligned on. So that was one. SMCI. Look at what happened with SMCI.
Man, that had a week. That had a week this week.
Yeah, but this is what I'm saying, that when you find these secular opportunities, you have to take these opportunities and run with them. The problem is, right now we're actually transitioning to a lot more overvaluation. So right now is actually a time to take those wins and convert them into longer term cash generating parts of your portfolio. So I expect next year to be 270%. God willing, I hope I get there, but I don't necessarily think that that's the target for me. If I can do 30-40% per year, I think that's a really, really strong year. 15% is like, okay, I can beat the market. And 7% is, yes, that is what I want. And that's like within my dividend portfolio. But 7 to 10%, in my opinion, is not hard to beat, you know?
So the reason why I say that I like Alphabet just a slight bit more than Meta, they were both very similar on a price to free cash flow and forward EPS basis. But when you look at the two underlying businesses, while Meta does have better margins, no question about it, Alphabet just generates so much more operating income, so much more net income, so much more free cash flow, and their cash on hand to long-term debt. I mean, that's one of the craziest metrics I've seen from any company. It's such a beast, and I think you're getting it at such a good price point, even at these levels. I mean, when I did this, the price to free cash flow of the two of them, Alphabet was 21.2 times and Meta was 21.8 times. They were virtually the same.
Price to free cash flow, right?
Yeah, compared to the rest of big tech. Microsoft was trading at 42, Apple at 28. I have the price to earnings.
Palantir is at 75, by the way, right now.
Yeah, you can't compare. I mean, you can, but it's a much different story. And then you look at the earnings growth between the two, basically the same amount of earnings growth over the next 2 years, very similar forward price to PEs. I mean, look, I would still buy both of them, but I thought Alphabet was a little bit more interesting based on how much more they generate compared to Meta. There's just more they can do with that. And I think they're going to continue to authorize more on the buybacks. I think they just did another 70 billion to their repurchase program. So I think that's really going to come into play over the next couple of years.
I think people are really, No, I was going to say, I think people are really underestimating Google's value when it comes to share buybacks. Their buybacks right now, last quarter was almost 16 billion a quarter.
Huge.
Okay. And that's going to actually accelerate going forward. The other thing is, there is all these people saying there is a risk. There is a risk with Google's search business going down if, let's say, the antitrust part of the federal lawsuit, where Google's monopoly on search is going to go down, because now they're going to have to stop paying Apple $23 billion a year. In what world does them not having to pay Apple $23 billion a year in cash flow mean it's bad for Google? Please tell me. That adds about $2.50 to $3 of earnings to the mix. It's nuts. Dude, I hope to God Google has turned out be like, hey, listen, we'll settle with you. We won't pay Apple $23 billion a year in cash anymore. And instead, we'll just focus on returning that capital to shareholders. Bro, Google instantly overnight would probably go to fucking $175 a share. Like that. All right. I mean, there might be a drawdown initially because people are like, oh my God, this is bad. But the minute they saw earnings, then they saw a jump in earnings, like about fucking $2 a year. That's nuts. So like I said, I would be very cautious on anyone thinking that Google's search monopoly is going anywhere. And on top of it, their cash flows right now are all being channeled into buybacks that are just gonna, I don't know, man. What do you think about Google, Steve? With their buybacks?
I said before, the only one I don't own out of the 5 is Microsoft. I actually need to check one of the accounts.
Oh, the one I called a landmine is the one you defended for 30 minutes. You're saying you don't even own it.
No, but you know what? It's not a landmine. Any stock can go down 30%. Like, these companies are not landmines. Maybe they're overvalued in some eyes, but they're not landmines. Landmines are companies that would make sense.
That's
and
fair.
then they're not profitable. And it's sketchy if they can even break even. I mean, there's just too many things. These companies are not in that category. But I think that one of the things that people are bashing that I disagree with is Apple. Like, okay, so what? Apple's revenue declined by 2.3% year over year. Do I care? No, I don't care, because Apple's returning $90 billion a year in capital through just buybacks, and they're expanding earnings. The earnings actually grew by a penny year over year with declining revenue. Apple has gone through these periods where they don't grow for a year, but their EPS does. You watch. AR and VR is going to be big. Apple is not going to stop innovating. There is growth on the horizon. India is going to be huge. I think Apple's a sleeper here. Also, Amazon may be a sleeper too. Chris and I have had that conversation multiple times. I mean,
okay, let's do one more topic. Let's do one last topic to end it out in like 5 minutes. Thank you 420 people for being here. Michael Burry is short SMH. This is the fund. 20% of the fund is NVIDIA, 5% AMD, Intel, Applied, ASML, all that, Taiwan Semis, all that is SMH. He is short the fund. Any thoughts on him being short semis?
He's trying to go for the trifecta of pain trade, man. I don't know. I mean, it's a ballsy call, but it's not something that's unusual by any means. Semiconductors tend to be very cyclical. So, you know, when it comes down to it, there's like these boom and bust cycles in semis. So I think a lot of people have this euphoria of semis are going to be great forever. And I'm just like, yeah, not necessarily the case. Usually have like all this growth that expanded. Like right now, everyone has a lot of exceptional aspirations that AI is going to do X, Y, and Z. And at the end of the day, you know, I hope that happens. But every time that there's an efficiency gain, that could limit the potential for, you know, additional revenue in the future. So, you know, like I said, semis are just cyclical. So I wouldn't, Sorry, go ahead.
One thing that worries me with the semis, and NVIDIA is an amazing company, and what they're doing is amazing, but they're pulling so much forward right now. You got to look at it from a business standpoint. When a business is spending all this money on GPUs to train their models, they're not refreshing those GPUs in a year. Like, they're making that CapEx expenditure, and that may last them for 2, 3, 4 years. I mean, they're not going, unless it's a company that can just spend. I don't see that happening. And now you have Microsoft coming out with their AI chip that they just announced. Meta and Google are making their own chips. Same with Amazon. I'm wondering how much that's going to cut into NVIDIA. And look, people love to bash Intel. Don't sleep on Intel.
It's up 50% this year.
They've never been huge on the GPU game, but with them creating the fabs in the next couple of years, they may become that ARC chip. They didn't do much, but they may enter that space and take some share away.
I told you guys about this one company that I can never, ever time right, but she is like an ex-girlfriend.
ASML.
No, not ASML. Broadcom. Everyone
yeah,
keeps forgetting about Broadcom.
Amazing
Broadcom,
company.
look at this, $975, man. This is gonna be the one fucking company that kills me, dude. Every single time I'm just like, you know what? I'm gonna get in. I just wait for just a little bit better pricing, and I never goddamn get. Hawk Tan is just probably one of the most amazing CEOs, man. Like this guy. And by the way, everyone's like, oh, Google, all of them. The secret sauce behind Google's TPUs is not Google. It's Broadcom. Okay. Broadcom is one. The secret behind Apple's success is not Apple. It's Broadcom. Just letting y'all know. Like a lot of people don't know that. So that's the magic that I'll tell you guys. Broadcom.
All right, let's
and they just have their acquisition with VMware that just got approved. So do with that with what you will.
Let's let KRIS get out of here. He has Cash Flow Chronicles coming up. We want to give a shout out real quick to TJ. TJ, friend of the channel. He was in the hospital. He had sepsis, just had surgery a couple days ago. He's doing better. Apparently, he's making the chat laugh because they stuck something in his ass or something. So he says, I have a hole in my ass the size of a tennis ball. So, well, you're alive, TJ. That's what matters. So even if the hospital's passing around pictures of your ass, I hope you're doing well. And we want to give a lot of love to TJ. So she lied to my ass. All right, TJ. Hope you're doing well. Cash Flow Chronicles, that's up next. KRIS, you could link it in the chat. Matt, you can link it in the chat. I would highly recommend anyone who has another hour to want to hear about stocks. It's another podcast KRIS is on, and you guys can check it out and go from there. Steve, any last words?
No, I'm just wondering if the rally gets faded or not. That's all.
Okay. All right. Thank you, everybody. We'll see you on the next one. Bye-bye.
See you later.